Welcome back to Lessons in Property with me, Steve Hand. So in this episode, we've got one of our clients. And this is particularly interesting because this client hadn't taken out bridging finance before. And the first project that he did, he took bridging finance out for both the purchase and the refurb. It blew him away. The next project landed on his lap and he thought, I can't take this on as well. I've not sold my previous projects, but he could, because we got him bridging finance for the purchase and we utilised his main residence, the equity that was in that, as a cross charge to fund the gap. So you're really going to like this one. Make yourself a brew and enjoy. Today I've got Tony McEwen with us, and Tony is a developer. You've been in property for many years actually, Tony, haven't you? Building your portfolio, and more recently we've been focusing on flips and adding value to property and taking out the maximum profit we can to build up our cash pots. Then we can look to purchase portfolios or more property down the line. If you want to just tell us a little bit about maybe what you're on with now, Tony, and we'll just talk through that side of it.
Yeah, like you said, I have been in property for a few years, and I decided to start selling off some of the property that I had in order to raise a pot of capital to get involved in sort of projects. Quite like the sort of excitement of the projects, but the end goal, as you say, is to sort of build up a larger portfolio by using that sort of increased capital pot. So in the last year or so, I've managed to get into a couple of projects and get the ball rolling with that.
Yeah, and the one that the Newcastle property, if we touch on that one first of all, so that was one that you had some funds to begin with, didn't you? And what we were trying to do there was identify something that was below market value. So we're getting a bit of a discount to begin with day one, and then you'd spend roughly 40k on it to add the value, modernise it. Nothing too heavy refurb, more sort of cosmetic improvements. There were some internal modifications, weren't there, in the property? And then increasing the value, getting it back on the market. So then a family that's typically looking for that property, which was in a good part of Newcastle, doesn't then have to have both their deposit for the mortgage company and the refurb money because it's already in working condition.
Yeah, that's right. The house was sort of pretty dated, pretty tired. So we, as you say, there was a sort of £40,000 refurb required on that. So mostly internal, mostly cosmetic. We've gone in. The whole house was sort of every wall skimmed. We did take down a wall between the kitchen and the living room to give that open plan sort of feeling, which I think is quite, a lot of modern buyers now, a lot of modern properties are like that now. So we decided that was a good course of action to take that wall down, and it certainly did make a big difference when you see the finished product. But yeah, every wall skimmed, skirtings, facings, doors, new bathrooms, new kitchens, the whole works really to bring that up to a good standard that it was ready for the market.
If we just get the message across to people that when you're buying a property that needs quite an amount of renovation, which could be 6 weeks, it could be 10 weeks. It's usually in that kind of bracket if it's a medium type level of refurb. To buy it, you tend to find people either pay cash or they'll use bridging finance, because you can't get a buy-to-let mortgage on something like that and then knock it about, because lenders want you to rent it out straight away. And sometimes properties like that, they're either not habitable or they might fail the EPC rating. They just might not be ready to put a mortgage on. How did you acquire that from the finance point of view?
Yeah, so acquired that using bridging finance. At first, I wasn't really sure how the bridging finance would work, but when I found out, basically I could acquire the money to buy the property, and also the particular lender that was used would give us the money for refurb, but also the whole project basically was funded by the lender, which actually it blew my mind at first when I found out that was something that you could do.
It's quite fascinating because a lot of people out there think that they've got to either pay cash for the property and have the refurb money, in which case, it's several $100,000 in a lot of cases for a project like this. They don't realise that you can actually get 75% of the purchase price. And this is assuming that we're going with a lender that lends against the purchase price 75% against the purchase price, and then 100% of the works for conversion.
Yeah, that's right. So that was something, because of my sort of inexperience in doing projects and that type of funding. I didn't know that. I didn't realise that was a possibility. And as I said earlier, there just sort of blew my mind when I thought, you can get 100% of that funding to carry out your refurbs. And I think sort of people like myself who were used to sort of conventional lending or conventional mortgages, if you like, most people out there won't know that that's something that you can do or something that you can get your hands on.
No, they discount it because they tend to think you've either got to have the money in the bank or you've got to have that level of equity in your own house to be able to remortgage it to pull the funds out. But of course, for that project, we didn't touch your house at all. We just we looked at the project in isolation. You had some savings anyway, and it's like put down a deposit, but we'll maximise the amount the lender will give you against the purchase price and, of course, covering the cost of the refurb. And a lender like the one that we went with is comfy with it because at the end of the day, even with the refurb monies given to you, they're not exposed to any more than 75% of the end value. And some lenders will look at that, they'll look at some 70% or 75% of the end value. So that way, if they had to take the property off you, which is a very rare thing that lenders do, they don't want to do that, then in their mind, they're going to get their money back, because it's 75%. With bridging, people, naturally, when I say the word bridging, people sort of clam up and get all fearful, and it's understandable. I did myself before I took my first bridge out. But bridging finance, we tend to structure it over a longer time, don't we? So like with that project, you can be in and out of it in 6 months, by the time it's done up, sold on. But typically we'll arrange a bridge over 12 months. So it kind of gives you a little bit more breathing space and a bit more comfort, doesn't it?
Yeah, that's certainly the case with the Newcastle property. We did it over the 12 months, and I think you're right in what you're saying just about the bridging finance. That there is that sort of stigma around about the bridging finance. Again, going back to people like myself before I started, that just used the sort of conventional funding methods. Most people are sort of wary of bridging or fearful of the bridging finance. But I think once you sort of drill down into the kind of nuts and bolts, it's really an essential part of a developer's toolkit. It's certainly in my instance and where I am on my journey, it's certainly going to be an essential part of my toolkit, as I say, just so that to use that power of the leverage to sort of accelerate where I want to get to.
Absolutely. And I guess that if people are thinking, well, what if the property's on the market for longer than I expect? What if it doesn't sell for the price that I want it to sell for? Well, a couple of things there is that it's rare that we'd get to the 12 months anyway, because we tend to add on a decent contingency. So if somebody says to us, I'll complete on the property, it'll take 2 months to refurb, and let's say 3 months to sell, 3 or 4 months to sell, you've got 5 or 6 months there when the bridge should be paid off. Now, if it does eat into a little bit longer, we've arranged it on 12 months, so we've got plenty of breathing space. But if in the rare occasion that you need to extend that, we can either go back to that lender and get an extension or do what's called a rebridge. So a bit like a remortgage on your house, we can just switch lender and extend that facility. So nobody's looking to take an asset away from somebody. They're just looking to either extend it or we just switch lender. So I guess that gives people sufficient comfort. The other thing that you can do, let's say the economy took a turn for the worst and the market for selling wasn't that buoyant, then we can always look to refinance onto a buy-to-let facility, like a longer term facility, and then that way the rent coming in covers the monthly payment going out.
I think once you know all of those things that you've just spoke about there, it gives people that comfort. People that don't or haven't used bridging finance before, it starts to give you that sort of level of comfort, and you think, well, bridging's actually not that bad after all, because as I said, people have got that stigma about it and are not keen to use it until you really kind of understand it, to confirm that it does give you a level of comfort. It certainly gave me that level of comfort to sort of take the plunge and say, yeah, this is how I need to move forward.
There's no monthly payment with bridging. Like if you were increasing your mortgage on your house, then there'd be an increased monthly payment. And for a lot of people, that would put them into a stressful situation, because the books are balanced, if you like. You're increasing your monthly payments significantly. It's putting people under unnecessary pressure. But with bridging, lenders take out the interest and fee day one. And then that way, there's no, unless you choose to, there's no monthly payment. And for some people, if they want a higher net loan, they can opt to pay the bridge monthly and it'll give them more money day one. But most people do it the other way. And then the second point really is about the type of projects that you can go for. So rather than looking on Rightmove like most people do, paying market price and getting something that's habitable but just needs a little bit of a refurb, you can start to attack properties that are off market at auction where speed's required. They could have structural defects. They might have a failed EPC. You know, it could be that an elderly couple's been in the property, it's been left, it's gone through probate, it's not been done up for maybe 30 or 40 years, and it just needs a good rip out, doesn't it, and a good doing over, and bridging's perfect for scenarios like that.
Yeah, definitely. I wouldn't have been able to get into the project in Newcastle just due to the cost of the purchase price and also the refurb money if it wasn't for bridging finance. There would be no way I could have done that.
And then the latest one that we're looking at the moment, it's not yet gone through, has it? And this happens over time. As you get more into property, opportunities will come your way, more opportunities will come your way, and they could be quite heavily discounted from the market value. You know, you could be getting 15, 20, 25% below market value properties. And you want to act quick, because if you don't act quick, someone else will. So this is where, I guess, if your funds are tied up in another project, your savings are used up for whatever reason, and you see this deal, you want to move ahead on it, you've got your main residence, your mortgage is low, you know, you've been chipping away at it for many years, then you've got all this equity that's just sat there and doing nothing, but you don't want to increase your monthly payment. And that's where we can look at a cross-collateral charge, where it's simply a bridge on a house that you currently own. And it allows you to tap into that equity for the deposit on this new purchase. And you can still take a bridge out on the new purchase. It's just really the shortfall that's required. We can tap into either main residences or buy-to-let portfolios or equity that people already have.
So with this, the latest property, as you say, it came about quite quickly, came out the blue, and it was such a good deal that I didn't want to sort of lose out on it. The property was discounted by 25%, and that's when I reached out to yourself just to see, you know, is there any way, how do we go about this? Is there any way we can get involved in this property without actually having the funds to put into it?
Yeah, no, it's ideal, isn't it? And then that way, you know, you're acquiring another project that you might not have otherwise gone for. So instead of doing one a year or one or two a year, you can do 2 or 3 a year. And, you know, I was always taught that for every 100 grand of value, aim to make about 15 grand in profit. So roughly 15% of the value. So if you're looking at something that's a couple of 100 grand, which is quite normal these days, that's an extra £30,000 on average that you can get from that project and, you know, top up your bank account with.
It's because I want to sort of accelerate the journey quite quickly. That's why I was keen to sort of explore the cross-collateral charge to be able to do this. Otherwise, I would be doing sort of maybe one project at a time and trying to build up that capital, which is obviously going to take longer. So if you've got a goal in mind, it's going to take you longer to reach your goals, and yet unless you're prepared to use these other types of funding, like the cross-collateral charge.
Yeah, no, absolutely. And then a lot of people are working full time like yourself, and they think, I can't do property, I can't do a flip, it's going to take all my time up. But of course, you can leverage your power team, can't you? You can leverage other people. You don't have to organise the trades, because for a lot of people, that's a headache. You know, you can put one person in charge that project manages it, organises the trades, and away you go. And that's exactly what you're doing. And you're away for a couple of weeks at a time, aren't you?
Yeah, so I'm working offshore, so away for 2 weeks at a time, which sort of limits me to an extent on what you can actually do when you're away. Obviously, when you're at home, you've got more time to look into things. But for me, the best course of action was to be completely hands off and just hand this over to like a builder or a project manager to look after the projects for me. So basically, you know, if you are sort of time poor, there is ways that you can still get involved in property and reach for your goals, basically, if that's what you want to do. You know, just leverage other people's time.
Yeah, you don't have to give up your job full time, do you? You don't have to wait till you've retired to do it. You can blend the two together. And I guess the last point is just about we're a brokerage, of course, and why people would use a brokerage instead of, because you can with some lenders you can go direct, but why did you choose to use a broker, or what benefits do you see in that?
Well, for someone like myself who'd only ever been involved in sort of buy-to-let properties before, and again just conventional sort of mortgages, to go down the sort of the bridging route, which as I've said earlier, I didn't know too much about in the beginning. I would have had no idea on how to present a case to a lender to achieve that. And the girls at Express, they've sorted that out, and both transactions so far have been seamless.
Yeah.
Using the broker, and certainly I'll always go with the broker in future, because ultimately you could lose it on a project just because of maybe one question that you're not answering correctly, or giving them the answers that the lender are looking for.
Yeah, it's interesting you say that, because I was doing a Zoom with Apex Bridging that are based in the Midlands the other week, and the lady I was speaking to there was telling me exactly that when they have dealt with people direct, it's not uncommon for them to ask a question, and of course they're on recorded lines, and the client says something that they're not meant to, or yeah, it's just not an answer that they want to hear, but they can't backpedal. Then it's like, well, I've heard that, so sorry, we can't help you.
And I think in sort of this day and age, lenders, it doesn't take much for them to sort of knock back a deal now. They've got to have their own level of comfort. So I think it's imperative to use the broker, because, as I say, you're either going to incur delays if you present a case yourself. If you're not used to it, you're going to incur delays, or worst case scenario, lose out on a project altogether, just because you're not satisfying their questions.
Yeah, no, exactly. I guess there we have it. For anyone that's thinking about it but has stopped themselves in the tracks, just reach out to us. We speak normal language. We don't dress things up. We'll just guide you all the way and help you out and enable you really to, like yourself, Tony, accelerate your progress in property.
As I said, it's seamless. The transactions that I've done so far, they've been seamless. The girls at Express, they've dealt with everything. Any query that comes up, Tony, we need this. Give them it, and it's done. Job done.
Well, Tony, thank you very much for coming on Lessons in Property.
So there you go, a different point of view from the client's perspective, not the lender's this time. So if you're a property investor and you want to get involved in more projects, don't forget to like and subscribe for more lessons in property. See you next time.